Good Monday morning. This is Drew Wright. I work for First Heritage Mortgage here in Kitty Hawk, North Carolina, and my MLS ID number is 589370. Every Monday morning, we bring to you a little bit of news about mortgage financing. We're going to talk a little bit about lot financing today and options there that are attractive potentially for buyers of lots and the best way to finance a lot and some things to think about as you think about building a house on that lot in the future. But first, we'd like to give you a little bit of a mortgage rate update and just tell you where we see the economy and rates moving. The election's over now. It's been a couple of weeks. We've seen this so-called Trump bump a little bit in the markets with initially the indexes, the Dow, the S&P 500, and all reaching new record highs and doing really well. Some industries are really excited about the opportunity under this new administration and deregulation, and overall I think the perception is the economy will do well under Trump. But the Trump bump also is giving us a bump in mortgage rates, unfortunately, and so right this minute rates are pretty close to 7%. We're sort of holding the line as of today, doing this recording at 6.98% for a 30-year fixed rate on a primary residence with no points. So I do think rates are sort of stuck in this little bit higher rate environment for the short term. We're seeing good activity with people wanting to do stuff regardless. In fact, some people are just saying, I'm glad it's over. We got certainty. We can move forward and feel good about building a house or buying a property. So that's good news. Our topic though is lot loans this week. And so we want to talk about lot loans because we've always tried to be a lot loan resource for clients. Lot loans are a mortgage product that some lenders simply don't really have a lot of. A lot of mortgage companies don't really do construction financing or lot financing, and we want to be available to do both of those. We think it's very important in our market to offer construction financing as well as lot financing. And last week we talked about a little bit about construction financing, but you got to buy the lot first in our market before you can build a house. So we thought this week we could talk about lot financing. So with lot financing, there are basically a couple of options that consumers can choose. One's the traditional route, and that is getting a lot loan. So lot loans typically, and we've got different investors we can work with or lenders that make lot loans. But typically lot loans require 25% down. That's for like the first thing. You gotta understand they're a little bit larger down payment than a house as a percentage goes. And they also typically have a 1% fee. So for example, if you're buying a $150,000 lot, your loan amount's gonna be $112,500. So you're gonna pay a 1% fee, which is $1,125, and closing costs is going to be about $3,500. So you're going to need about $4,500 to go to closing on top of the 25% down payment for the lot loan. So they have some cost, but there are some benefits I'll get to in a moment as we talk about the other options of mortgage financing for lots. But these traditional options that I'm talking about, they're typically giving you options where you can have interest only for up to 3 years, which is a very good option. You have low payments that way, payments that are probably under $700 for a loan amount of this size. That's $112,500 in loan amount if you're buying a lot for $150,000. And then the other options are to amortize it. And really, if you're going to amortize it, nobody really does 30-year lot loans. So you're best, in my opinion, to get a 15-year lot loan. One, the rate's locked in longer. Some do offer true 15-year fixed rate lot loans. And those rates are around 8 1/8. The 3-year interest only, by the way, is about 7 1/4. So better if you do interest only from a rate perspective. 3 years interest only. The 15-year fixed is at 8 1/8. It's going to give you a little bit higher payment, but really when you look at it from the standpoint of the other options that are out there for lot loans, which is the third option I wanted to bring up, and that's a 20-year term for a lot loan, you're not saving that much money on a monthly payment by going 20 years. It's probably less than $150 a month in savings. About what it costs to go out to eat dinner for two folks up in Duck. So I think if you could afford that extra $150, you'll be happy, because if you're taking a 15-year lot loan, it's probably because you're not building right away. You're going to build in maybe 3 to 5 years. And if you take the 15-year loan, you're going to build equity. So you're going to owe about $87,000 on this lot at the end of 5 years. Whereas if you do it for 20 years, you're going to owe closer to $98,000. So for a little bit extra dollars per month, you can really build a little bit of equity on your lot loan. The other way people finance lots, the non-traditional way, the non-lot loan way, is to do what appears to be as paying cash. So you can do this by getting a second mortgage on the house that you currently live in, whether it's here and you're building a new primary, or whether it's someplace else, like your home state and you're buying a property down here that's going to eventually be a second home, which is really what we see more often. And so we see this all the time, where people have actually maybe figured this out on their own, where they say, well, these lot loan rates seem like they're high, and they're not true fixed rates. It's a 3-year interest only. And what if I don't build in 3 years, and the 15-year payment's high, and there's these closing costs. So with these non-traditional methods, getting a second mortgage on your home, one, you should never pay closing costs. There are plenty of lenders out there who will pay all your closing costs 100%, and you avoid this $4,500 in cost. Two, the rates are really attractive and the terms are not bad. Like, you can borrow a second mortgage from some lenders at rates of 6.2. Those are lower than traditional mortgage rates today for a 15-year term. The payment's more than if you did interest only, but it's less than that lot loan that was 8.125 at 15-year fixed. And so that's pretty attractive, okay? And so that's a really good way to do it. And of course, from a realtor's perspective, and your contract really is written as a cash offer. It looks like you're paying cash when you go to closing, because there is no lender funding or loan documents to sign at closing. You already signed these documents, you cashed out, you refinanced, you got your money, you went to closing on the lot a few days later. The other way to do it with the non-traditional route, putting a mortgage on your primary residence that we talk to people about, is getting a home equity line of credit. Home equity lines of credit are not going to be as low as these fixed rate options at 6.2 on a 15-year fixed. But again, they pay all your closing costs. You can do interest only on this. Equity lines are interest only for 10 years. Unfortunately, they do have to be paid back. Of course, after 10 years, they're going to start being amortized if you haven't paid them back for a 20-year term, and the rate's not locked. So there's a little bit more risk by taking an interest-only home equity line of credit, but it's a lower rate. It's prime minus 1% in some cases. And again, they're not charging you any closing costs. So if prime's at 7 3/4, that's a 6 3/4% interest only rate. The other rate that was interest only on the traditional lot loan was 7.20. So these are really attractive options to do this. There are lots of options on second mortgages, and lenders very differently price on second mortgages. So we have seen some consumers probably not choose the best second mortgage option. So, Alex and I really pride ourselves on knowing what's available for the consumer and trying to help them make the best decision. So we really encourage you, even though we may not be the ones making the equity line for the client, we have great referral sources that we can put you in contact with and work with you and even help you through the mortgage process with them, so that your process goes smooth and well, and that we're also trying to help you pre-qualify for the construction loan, so you know when you get ready to build, that's not going to be a problem, and getting the best terms you can possibly get on a second mortgage. We're willing to do this even though we don't get really compensated for these loans, because we ultimately want to see you build a house with one of our great builders that we work with on the Outer Banks. So lots of just phenomenal builders on the beach that are great people to work with. So anyway, the downside, there is a downside of doing a lot loan the non-traditional way by getting a second mortgage on your primary residence. And that downside, it can be pretty consequential if you don't think about this in advance. And some people are willing to do the traditional lot loan and pay the cost and maybe have that little bit higher rate because of this significant downside. And the downside is this: if you come to us and tell us that you want to build a house and you paid and didn't talk to us at all, you just said, hey, I got a lot loan through a home equity line of credit, and I'm gonna build a house, and I'm gonna put these, the lot together with the cost to build, and that should be my appraised value. I'll give you an example. So let's just use $1 million as a nice round number. And so we say that you bought the lot for, $300,000. Your cost to build is $700,000 in that example. 3 plus 7 would be $1 million, and 80% of $1 million is $800,000. That's what you'd like to borrow, and you have a loan over here because you bought this lot for $300,000 for maybe. You might have it for the full 300 if you have enough equity. That was your choice. So maybe you borrowed 150. Doesn't make any difference what you borrowed. If you borrowed money on it, you can't get money from this construction loan to pay it off. Your cost to build is $700,000. Your value is $1 million because your lot is $300,000. So, and 80% is $800,000. So why can't I borrow $800,000? Because lenders will not give you money as cash out at closing to pay off a lot and give the builder a deposit. It sounds sort of crazy. They would do it if you had the lien on the lot. So if you had taken a lien on the lot for say $100,000, we would give you an $800,000 mortgage easily, and we'd advance $100,000 at closing, pay off the lot loan that you had with this other lender, and it'd be gone. But if you wanted to do that by paying off a second mortgage, they won't allow it. And so some lenders or some borrowers clearly are willing to take that extra cost and that little bit higher rate for the short term of a year or two if they're going to build pretty quick, and get a lot loan for that very reason. We probably talk to more people who decide to get a lot loan even though they don't want one because of this example. Because they want maximum financing. And that's traditionally what people want, is maximum financing in a second home or a property they're gonna rent. And even though we call properties second homes very often, people still intend to rent them even though they're gonna use them themselves. So I hope this was helpful. Alex and I are here to help anybody who has questions about lot loans, whether it's a customer, a builder, or a realtor, or just any inquiry. Please give us a call. We'll walk you through the process. We're glad to collect your financial information, take an application, and work with these lenders to get this done for you timely and professionally, and to also ensure that when it comes time to build the house, that $700,000 house, that loan amount, whether it's 700 or 800, is something that you're going to qualify, which is important to do. So if you would like, we also are now doing audio and video. So this gets posted to YouTube, and you can go on and see our YouTube channel. I think I'll have the link to the YouTube channel in our email and to our Word document that we send out on Tuesday. If you want to see our YouTube channel, we'd love you to subscribe and like it. And Alice is doing a really great job with our technology. So anyway, have a great week. Let us know if we can help you.